When it comes to company news on home ground, Brimstone Investments has reported a fall in their first half headline earnings per share to 81.2 cents, and this from 149 cents in the previous year. Revenue for the same period was down 2%, but the group say that they remain cautiously optimistic about the company's future prospects. To drill further into those numbers now, we chat to the company's CEO, Mustaq Brey. Thanks so much, Mustaq, for joining us this morning. Let's get straight into it, because we've seen, as I said, headline earnings down 44%, HEPS coming in at 81.2 cents. So looking at those headline numbers, things aren't looking too good. It seems like, it's been a tough 6 months for the company. To what extent does this belie the underlying performance of your portfolio?
No, I think to the contrary, we had a very good 6 months. You've got to remember, you're looking at quite a different company at the moment. In December last year, we returned 1.4 billion rand to our shareholders. So the actual results you're looking at now is from a smaller company. We unbundled 1.4 billion rand shares in Life Healthcare to our shareholders. If you look at our actual comparative numbers for last year, for the first 6 months, we only made a small profit pre-tax. And most of that profits in actual fact related to the unbundling of the Life Healthcare shares in our last year, June period. So the results for this first 6 months we are very, very happy with, and it's in actual fact very, very good results.
To what extent, though, has it forced you to perhaps revise your investment strategy from here on out, especially where you have cautioned that the outlook ahead may be a bit of a challenge?
Well, we had to do that in terms of the statutory requirements, in that our results were going to be more than 20% lower than the previous reporting year, and as such we had to go out with a caution to make that announcement. But if you analyze our results in actual fact, they are very, very good results. Coming out with a profit of more than 200 million rand for the first 6 months, we are very, very happy with those results.
Let's take a look at sectors at this stage of the game that are presenting viable investment opportunities for you as you progress forward.
Well, look, we're happy in the sectors that we are at the moment. Our healthcare is doing very well. In the fishing industry, there are some challenges, but you can see that from our results as well, with the rand dollar being where it is. Although up till the end of June, the rand was much, much stronger. In the last 6 weeks, that's changed substantially, and that was after our reporting period ended. So those things are not looking too bad at the moment as well. And then the fuel price, the crude oil price, has been very high, and that affects the fishing companies directly.
Taking a look at your gearing level, I mean, we've seen some reduction in that coming through, and that with the sale of Life Healthcare specifically. To what extent would you look at, as you pursue new opportunities, that increasing, and what's the kind of limitation you've set in that regard, bearing in mind that we are in a low interest rate environment right now?
Well, we're right in the process. In actual fact, we posted out a circular to our shareholders on Friday, so it's public now, where we're going back to shareholders in terms of the New Companies Act to increase our borrowing levels. We're in negotiations with financial institutions at the moment to put in a loan which will help us in actual fact in going and doing further acquisitions later on in the year or next year.
Is anything on the radar now that's going to be for you as lucrative as Life Healthcare was? What's the next Life Healthcare?
But at the moment, no, there's nothing at the stage where we could say that we need to go out on cautionary to make a public announcement. We get offered various deals. Still, I mean, actually the pricing is very, very high, and quite often after we've done our own due diligence and that type of thing, we walk away from the deal, because we set ourselves parameters. We look at making sure that we can add value to our shareholders, and if it doesn't meet our pricing, we walk away.
Well, you've been through the opportunities, you've been through, the positives that maybe are masked by the headline figures when you're looking at them up front on these results. But drilling down a little further, I mean, revenue down slightly, roughly 2% to 874 million rand, and that despite sales and fee income rising 19%. So where are the pressure points? Where are some of the challenges you face at this stage?
Again, if you go through the detail of our numbers, included in that revenue number was a special dividend of about 160 million rand we received last year from Life Healthcare before it listed and we did the unbundling, which obviously wasn't repeated in the current numbers. So if you take that out again as a once-off adjustment, you'll find that our actual numbers are in actual fact up substantially for this period compared to last year.
In terms of diversifying your portfolio on a geographic basis, is there anything that's on your radar screen in terms of that?
Not really. We in actual fact like to support the companies that we've invested in, where they've actually gone up in the up into Africa. And overseas as well. We go that via the companies that we invest in.
Well, let's leave it there, Mustaq. Thanks so much for your time this morning. Of course, Mustaq Brey is CEO of Brimstone and joined us live from our studios in Cape Town this morning.